Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Jeffrey Halley, Senior Market Analyst Asia Pacific at OANDA. Jeff, good to have you on the show again.
Hey, great to be back after quite a long COVID-19 recovery.
Yeah, you're looking better, not 100% there, but getting there, I hope.
Yeah, well, I still have a face made for radio after the virus, but it is getting better.
All right. Now, before we get your sagely advice, let's take a look at how markets in the region are performing. But we're going to start with crypto markets first. Bitcoin is at 37,916. It's down 1.03%. Ethereum, on the other hand, is at 2,498.34. It's up just marginally, 0.14%. Now, across the region in regional stock markets, we'll start with the SGX. That's at 3,178.54. It's up 0.93%. Bursa Malaysia is down 0.86% at 1,487. Across the region, we've got the Hang Seng, which is at 3,467.3. It's up 0.56%. Oh, I beg your pardon. That was the Shanghai Composite, which is at 3,467.3. It's up 0.56%. The Nikkei is at 27,572.76. It's down 0.25%. The Hang Seng is at 26,605.79. It's up 1.57%. Rounding off the numbers, we've got the ASX 200, which is at 7,498.7, up 0.32%. Jeff, what's your view on market performance across the region?
Yeah, it's a mixed performance today, and I think the rising COVID-19 cases in Japan has actually caused the Nikkei to fall a bit today. They're talking about more states of emergency, etc. Similarly, COVID-19 and the political turmoil in Malaysia, I believe, is behind the fall in the Bursa Malaysia today. And I think that is going to be an ongoing issue until either one of those issues resolves. We're seeing a bit of a buy the dip action in China markets today, including Hong Kong, where most of the big China tech heavyweights are listed. After the spiritual opium comments about gaming yesterday from the Chinese government newspapers, we saw a huge sell-off of the likes of Tencent, etc. But buy the dip just can't help itself. There's always a bit of FOMO around, and we've seen investors dipping their toes back in the water today. I personally think that's a dangerous game and that the market is still mispricing regulatory risk in China. But for today, that seems to be where the momentum's going. And we are still seeing very strong earnings coming out of the US overnight, which lifted markets to record highs there. So a mixed performance today. I think equities overall, though, remain a buy on dips with a caveat there on China markets at the moment. Singapore, we've seen some great banking results today. I think OCBC and UOB, and that is responsible for the STI rising today, as was the site of an A380 lifting off from storage in Alice Springs today, which has lifted Singapore Airlines shares as they start to bring some of their aircraft back home, ready for service after September.
Now, there's also the overhanging threat of the Delta variant across now China, and interestingly enough, despite all the isolation in Sydney in Australia. Now, is that weighing in on investors' minds as well?
I think it's been forgotten today, but I think we need to keep it in mind. Now, if we talk about Australia, they found a Delta variant case in Cairns today, which is in northern Queensland, and it's about 1,000 miles, 1,000 kilometres, 1,000 miles, I'm not sure, an awfully long way, like all things are in Australia, from Brisbane. It's very much a whack-a-mole Delta variant, and it pops up somewhere. When you hit it somewhere, it pops up somewhere else. And this is the problem that Australia is struggling with at the moment. We need to watch that trajectory. But I think for your viewers, we want to be watching the cases in China. Now, it's popped up in a number of cities in China. We know China is better than anybody at enforcing social order and controlling these outbreaks. But Delta seems to be a very, very elusive variant so far. And if that situation deteriorates in China, then that is going to cast quite a dark cloud over all of Asia, and talk will rise about an even more uneven economic recovery going into 2022. So it's definitely an evolving situation that your viewers should be monitoring.
Now, Jeff, I want to ask you about something that's closer to home. Reserve Bank of New Zealand is supposed to be expected to to basically hike rates up this month and at least one more time by the end of the year. What's your view on the New Zealand dollar and also New Zealand as a whole?
Well, for full disclosure, as a Kiwi, I did actually lock in my one-year mortgage a couple of months ago, so I'm quite pleased about that. Look, New Zealand unemployment today fell to 4%. Now, that's a huge gain because the market was expecting 4.5% to be the headline number. So massive positive number there. It's basically every single major bank in New Zealand now are predicting 3 rate hikes for the rest of the year. So by the end of the year, New Zealand rate should be somewhere near 1%. The next RBNZ meeting is the 18th of August of this month, and we'll expect the first rate hike then. That puts New Zealand in a very small group of countries that are actually normalising monetary policy. What does this mean? It means that New Zealand dollar has risen by 0.5% this morning versus the US dollar. It's also higher against the yen and the Australian dollar, and I would expect that outperformance to continue, particularly after the first rate hike.
Now, Jeff, what's your view then on key events and data points this week that will move markets?
We've got the US ADP employment this evening. They usually, that number is usually used to refine the non-farm payrolls, a number that we're going to see on Friday. That will be the key highlight of the week. And very clearly, currency markets, precious metal markets are in a holding pattern waiting for that number to arrive on Friday. As far as the rest of the day for Asia goes, we've got the Bank of Thailand policy decision this afternoon. I expect them to hold rates at 0.5%. Inflation is at the very bottom of their inflation band, between 1% and 3%. Obviously, they're having a lot of trouble with their economy with COVID-19 and the Delta variant at the moment. So I expect that the Thai baht, it's been one of the weakest currencies in Asia this year, and I expect that is going to continue. It's very near, dollar baht's very near 17-month highs, and I think we're going to see an unchanged Bank of Thailand. They don't really have any wiggle room either way, and dollar baht to continue moving higher.
Now, Jeff, thanks very much for coming on the show.
A pleasure. Thanks for having me.
Now, we were speaking with Jeffrey Halley, the Senior Market Analyst, Asia Pacific at OANDA, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks a lot for tuning in.